Yes, SEBI board meeting is over, and as we reported here on etnow, it has been approved by the board that institutional mechanism should be there for mutual funds. Now, this release clearly says that AMCs to have an institutional mechanism for deterrent of potential market abuse, and it includes front running. Remember, there has been few instances in the past like which happened in the Axis mutual fund case, where it was found that few of the members of AMC were involved in the front running. Now, to prevent those kind of instances, the board has taken the opinion that AMCs will have an institutional mechanism whereby the management will be responsible. Now, as far as the direction from SEBI is concerned, it says that considering the recent front running instances observed by the SEBI, the board has approved amendments to SEBI Mutual Fund Regulations 1996, and it further states that board has approved these regulations to enhance responsibility as well as accountability of management of AMCs. So all in all, AMC's management, meaning the management of mutual funds, will be responsible if at all there is an instance of front running, if at all there is any instance of fraud which happens in mutual fund. Now, there are other points as well which is given in the release of SEBI. There is streamlining of prudential norms for passive schemes. Now, this has been done to provide exposure in securities group of companies other than sponsors. What is happening till now? The companies were not able to have an exposure, and the limit was up to 25% as far as the sponsor companies is concerned. Now that cap has been enhanced to 35%. Apart from that, NCDs is also something which has been the focus area of SEBI board meeting this time, and 10,000 rupees face value of NCDs has been approved by SEBI's board. This means you and me, meaning any of the retail investors, can invest as low as rupees 10,000 in NCDs. Earlier, that limit was in lakhs. Yes, that in limit has been now reduced to rupees 10,000. We are also joined by Feroz Aziz. Feroz, welcome to ET Now. My first question to you is, do you think there has been enough steps which has been taken as far as mutual funds is concerned?
Yes, I think enough steps. I would say that there is progress, significant progress, and I think all of these are very, very important ones, which you actually very well articulated to the audience. So to answer your pointed question, yes, this is a great step. Of course, when you're speaking of front running and the responsibility of management is very, very critical. I think that's been amended. I personally think that that does not imply that there have been several instances of front running. But I think SEBI's microscopic management for the benefit of investors, I think is very apparent in this board meeting. And I think in spite of having very few instances of market abuse, still wanting to make sure that the responsibility is clearly on the institution and the management is a great news of further regulation for the benefit of small investors as we keep penetrating into the deeper parts of India on mutual fund platform.
Feroz, I want to understand the applicability of these norms. Now, once you say the management of AMCs will be responsible for any of the wrongdoing, how will it work in practicality? Because will you just make board responsible? Will you make just top 2 or 3 responsible? How will it work out in practicality according to you?
See, I think the responsibility of management or an institution is about putting right processes. Now, one is putting processes in place. I think that's the most important responsibility. Can you still have some needle in a haystack? That can happen. Can you put the CEO responsible for every employee's action if there are 2,000 employees? And front running has, of course, the case of COVID and work from home. All that had diluted the checks and balances marginally, especially during COVID period. So I personally think having a robust process and following that process can be an institutional or a management responsibility. I think very well it is being done. I think this will improve the process and its implementation that much more.
One One question I want to ask you about NCDs. Now, this is some market which SEBI has been trying in past that this should pick up. Reducing the size of investments in NCDs per se to rupees 10,000, do you think it will attract more retail investors?
I think there are two prone benefit to it. One is, of course, the spreads in the debt market today are very, very high. Because if large corporates are also borrowing money at 9.75, 10% for 5 years as we speak, and the government paper is at 7%, 3% is a great spread. Now that is being capitalized upon by ultra HNI and HNI investors. I think retail getting that spread makes so much sense. And the spread will, of course, compress if retail comes into it. And I think that there's dearth of capital in the debt side, and I think that will address. But the more important bit is it helps one mitigate risk. See, if it's 10,000 rupees, you don't have to buy one NCD, you can buy 5, 7 NCDs. Credit risk is one of the most dangerous risks. So you would not want to buy, if you have 1 lakh rupee, you would not want to buy one debenture of face value of 1 lakh with one corporate. Then it is make or break for you as a retail investor. But if it's 10,000, you can buy maybe 5 different corporates, 20,000 each in the form of 2 debentures. So I personally welcome this move from a perspective of not just making it affordable, making it diversified becomes a very, very important collateral benefit of this move.
Okay, thank you so much, Feroz, for joining and explaining the reasons why SEBI has taken these kind of steps. Don't go away. We have some more news lined up on the other side. We'll slip into a short break.
Hello. Yeah, I'll be there.
There's no particular time to rise. Not tomorrow, not the day after. There's no particular time to move forward.
Hello?
Through the ups and downs, amidst the chaos. The stories that can move an entire economy, drive us to break obstacles. The business stories that need to be heard, the stories that need the right voice.
3, 2, 1.
If you like this video, then like, share and subscribe to ET Now.